is this, the profit and loss statement. Has anyone ever seen a profit and loss statement for a business or tried to use one? A couple of people? Okay. So the profit and loss statement, so think of the two main statements we're going to go over today are the profit and loss statement and the balance sheet. And I'm doing this early, so while you have your energy up, I hope I don't bore you into your chairs. So two statements that we're going to go over today, profit and loss statement and a balance sheet. Those two statements are analogous to a movie and a photograph. Okay? Does anybody know which one the profit and loss statement is? Matt knows. The profit and loss statement is the movie. The profit and loss statement tells you a story. It has a beginning and an end, right? And it tells you what happened in that time period between the beginning and the end, okay? The balance sheet is a photograph, and it only captures one moment in time. It tells you what the conditions were in this one moment in time, okay? We're going to come back to that a few times. So, here's a few concepts I want you to know. These are in the financial definitions on the next couple of pages, so you can follow along in those if you like, or just ignore the paper and listen to me and read the paper later. So, the main thing that you want to look at, your profit and loss. So the first thing at the top of your profit and loss is going to be how much money did you make that year? And I should say, this is over a time period, right? It could be any time period. It could be a week, a month, a year, whatever. It doesn't really matter. So I'm just going to say, actually I'm going to say a week, because later on we're going to deal in weeks. So we're going to say, in a given week, we had some income, right? Our customers paid us for some stuff. And this whole, the biggest blue square represents that income. That's all the money we took in that week, okay? Out of that money, we had to pay for certain things that were direct costs to the thing that we produced. So the direct costs for the hot sauce are peppers, ingredients, oil, or I don't know, what goes in the hot sauce? Jalapenos, onions.
Secret stuff.
Okay. What about labor? Does it take any work to put that together? So any work that you spend directly making hot sauce is part of this. This is called cost of goods sold, COGS. And this is in your thing here. So these are also called direct costs, okay? Whatever you have left over after you've paid your direct costs is called your gross profit, okay? Your gross, and that's what's inside this next smallest box. So out of your income goes two places. It goes to your cost of goods and it goes to your gross profit, right? Gross means, what does gross mean? I'm not even sure. Gross is bigger than net. So just imagine this drawing. Net is what happens at the very end of everything. Gross is what happens kind of towards the middle of the process. So now we're in the middle of the process. We've paid for some things, but we haven't paid for everything, right? So out of our gross profit, we're going to pay our overhead expenses. And overhead expenses are things like rent, utilities, stuff like that. And then, once we're done paying our overhead expenses, what are we left with? Net profit, right? The net profit is called the bottom line. That's what some people call the bottom line. So your net profit is how much money is left over at the end of the week. After you've paid your cost of goods, and after you've paid your overhead expenses, that's what's left. Question?
Do you have like a big tip for how to easily tell the difference between a cost of goods sold and an overhead?
As a matter of fact, I do. This flowchart tells you exactly that. So, let's take a look at it. At the top, your business buys something. These can be confusing categories, so that's why I made you this flowchart, okay? Your business buys something. For one thing, you first have to figure out if what you bought is an expense or an investment, okay? If it's an investment, it it doesn't even go on this profit and loss at all. It goes somewhere else. It goes on your cash statement and your balance sheet, and we'll deal with that later, okay? But if it's an expense, it goes on your profit and loss. This is your profit and loss. This is what this statement's going to look like. So then you have to know, is it a direct cost, meaning cost of goods, or is it an indirect cost, meaning overhead expenses? And all of these terms are interchangeable. I know it's confusing, but I'm going to let you know all the terms so that when you hear them again, you'll be able to know which ones we're talking about. So a direct cost, if it's a direct cost, then does anybody want to read what it says about direct costs here? Down in the bottom left-hand corner.
If it's a direct cost, then the more of your product you sell, the more of this thing you will need, like lemons and a lemonade, or peppers and hot sauce, or hours needed to do a job.
Yep. And who wants to read what it says about indirect expenses over on the other side?
If it's an indirect expense, it will basically cost the same thing every month, like rent, insurance, the telephone bill, etc. If it does go up and down, it's not because you had more or less business, but some other reason.
Right. So what happens if you sell loads and loads of hot sauce? You have to make loads and loads of hot sauce to replace what you sold, right? And what does that mean about the ingredients that you need? You need to have more of those. Those costs vary directly with how much you sell. The more you sell, the more you need of that, right? Whereas an overhead expense like rent, you can sell all the hot sauce you want, but your rent isn't going to go up unless your landlord's a jerk. But it's not directly related to the volume of business that you did. Okay? Are people clear about that? Mm-hmm. This is wicked complicated. So
what if you sell so much you need a bigger plant?
It's true. Overhead expenses do actually go up, but not as directly as direct expenses do. We imagine these as being kind of a flat line that's the same, but really these expenses do go up the larger your business gets. But it's not like next month if we sell twice as much hot sauce, we're going to need twice as much rent.
Okay.
Right? Yeah. But eventually you might need a bigger place, it's true. So both of them are going to go up. But this goes up directly. That's why it's called a direct expense. It goes up directly in proportion to your sales. Who else has questions about that? Yes.
If you bought a bigger place, it would be an investment, right?
If you bought a building, a truck, any kind of machinery, like a bottling equipment or something, if you build out a kitchen, that would all be an investment.
This might be a little more complicated, but what about when you talked about like co-op members repaying debts like over time as part of the budget of the co-op?
Okay, well that's going to go on your balance sheet. So let's talk next about your balance sheet. So your balance sheet is a totally different